FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's 9/27/18. Well, metals, gold getting slammed again, down another $10.50 to that $11.85 range. When will the madness cease? What about the COT report? Why is this happening? Well, first, as always, just send us an email, be a part of the show, kl@kerrylutz.com. With us here, our good friend, Craig Hemke of tfmetalsreport.com. Craig, how are you?
Kerry, I'm just trying to survive day by day. This has been about the most brutal 5 or 6 month period that I can recall in the time that I've been running a precious metal site. But, you know, like all good things come to an end. All bad things will probably eventually come to an end, too. And hopefully it'll happen soon, man. I tell you, this is no fun.
Hey, you know, everything in life is temporary. You know, what do they say? In life, there's a season for everything, you know? And whatever that was, the birds turn. But anyways, so how is the worm turning right now? What is going on here?
You know, the most odd development of 2018 is something that I mean, I'll freely admit, I did not see coming. You and I have spoken over the last several years about gold seemingly being linked, correlated to, pegged, however you want to call it, to the Japanese yen. You remember those discussions?
Yeah, right. Exactly. Yeah.
And I was one of the first people to figure that out back in 2014, and it became a pretty good trading tool, if you will. If you could figure out where the yen was going to go versus the dollar, you pretty much knew where gold was going to go, and they would trade almost tick for tick. And then a funny thing happened. About the end of January, we began to notice that really no longer held. Mm-hmm. And what has since taken over as really, I mean, what appears to be the key driver of the gold price, that COMEX gold price on a daily basis, is instead the value of the Chinese Yuan versus a dollar. Mm-hmm. And it's a really interesting phenomenon in that when you think it through and try to figure out what might be causing this link, is it just a random deal? Is it that the value of the yuan is moving because of the same stimuli that drives gold? Or instead, is there a hand that's guiding the two together in almost kind of a peg? I would invite anybody to pull up a chart of the yuan versus a dollar. It's usually quoted with the symbol USD-CNY.
Right.
But what you have to do is invert that if you want to say it versus gold. If you invert it to CNY-USD, mm-hmm. and you look at a chart of that, and you look at a chart of gold, and especially in the last 6 months, they're almost identical.
Yeah, they're like moving in tandem. Just about.
And so in one regard, that explains, you know, I sat here and talked about a summer rally. I thought, man, the chart looks great, and that never happened. Well, partly explains that because while the yuan has fallen dramatically since the last time the Fed hiked rates back in June, gold has gone down the same percentage. And you, like I said, the more interesting thing, Kerry, is to think, well, why? You know, what is this? Is it random, or is there something
is there correlation?
I guess, planned or deliberate about it?
Yeah, a deliberate connectivity.
Right. Well, and here's my at least current line of thought. You know, we all in the gold community and anybody that's concerned about the future of the dollar and everything else took note back in March when China, after a lot of development and beta testing and all that kind of stuff, they finally introduced that yuan-denominated crude oil contract. You remember that?
I remember, and my prediction was it would pretty much be meaningless for the time being.
Yeah, so far, it's slowly gaining some market share, but you can't really say that it's impacting the crude oil price. But what it is, though, is it's a kind of a workaround outside of the dollar. You look at what the U.S. is trying to do by pulling out of the Iran nuclear deal and reimposing all these economic sanctions. Well, with a vehicle like this yuan-denominated crude oil contract, it gives the Iranians a place to sell their crude oil outside of the dollar system.
True.
Now they got to take the exchange risk of exchanging their crude oil for yuan, but at least it gives them, an opening in a market outside of, this petrodollar system where, everything's priced in dollars. Well, then here's the interesting thing. How, again, we're thinking hypothetically as to why there's this link between the yuan and gold. If you want to inspire, and I'm just, again, thinking out loud, if I were the Chinese and I wanted to inspire confidence in my currency and inspire people to use my yuan-denominated crude oil contract and use that as a market and increase demand for the yuan and supplant the dollar, or at least challenge the dollar, all that kind of stuff. Well, what if I could somehow fashion a mechanism where as the yuan rises and falls versus the dollar price of gold rises and falls at the same percentage? Mm-hmm. Would that not, in the end, make the yuan move at the same rate as gold, at least in dollar terms?
Sure.
And that's what I suspect is going on here, is that to offer this alternative to strengthen the yuan, there's a hand beneath this that has linked the value of the yuan to the dollar to the price of gold to the dollar. Mm-hmm. And it's a very interesting study going forward because, as you mentioned, the Commitment of Traders report, a lot of traditional analysis then, if this is the case, can kind of get thrown out the window. If all this stuff about, Elliott waves and, and charts and bottoms and Commitment of Traders reports and everything else that goes with it that, gold analysts look at. If instead, the only thing that's going to matter is movements of the yuan, well, it doesn't really matter what your wave count is or where we are with the Commitment of Traders. And so it's a really intriguing, discomforting in a sense time, though, at the same time. And it's something we've got to really keep an eye on as this year plays out.
Yeah, I think you might be onto something here because I've seen that chart a few times in the past week, and it's the mirror image, basically. Yeah. Mm-hmm. And,
and there's ways you can plot it. You can go to, people can see this for themselves. Like I said, you can pull up a chart that's CNY USD, and you can pull up a chart of COMEX gold or spot gold or whatever you like, and you can see how much they look like on a daily basis. But there are places you can go like barchart.com, where if you fiddle around with the site, you can plot the two together.
Very true.
And you can see for yourself, whether it's on a 6-month or a 6-day basis, that they move really tick for tick. And that's pretty unusual. That makes you wonder if there isn't something more going on than, all the traditional, mining supply and demand in India, and all the other stuff, like I said, that people have traditionally paid attention to. Maybe for now you can throw all that out the window.
Yeah, well, certainly our conventional tools are not working properly, right? Or have stopped working.
Yeah.
Or stopped furnishing insight. That's all they could do. They can't really predict the prices. All they can do is give you insight, which may or may not be accurate, and now they're inaccurate. So where is it heading is the question here. When is it going to stop?
Yeah, that's right. And if we've done anything right, because again, I was expecting a rally in the summer. I thought after this last Fed funds rate hike that we had back in June, gold was up at 13.10, 13.15, and it rallied the next day. And I thought, man, okay, here we go. And then, we all know what's happened next and happened since. So, I've been dead wrong about what was going to happen these last 90 days. But at least, if anything, understanding that this peg, or what appears to be a peg is driving the price, we've at least been able to avoid catching the falling knife, because a lot of folks are out there looking at some of these traditional things, like you said, the Commitment of Traders report or some wave count or something, and they're saying, okay, the bottom is in. And I've been saying, I wouldn't get ahead of yourself here. We're going to have to wait for some other factors. Like I'll give you here's a straight technical factor for you. Gold, price of gold. Think of how hard this is for it to do, Kerry. The price of gold has been below its 50-day moving average, basically the last 2 months, if you average all the prices together, been below its 50-day moving average since April the 23rd. I mean, that's 5 months. That's really hard to do.
Yeah.
And it finally approached it last Friday, got above it by about $1, and now is down $25 ever since. I mean, the chart just looks terrible, but there have been a lot of people saying, okay, here we go. And I've tried to consistently say, look, no, let's wait. Because again, if the market's a little different, if there are other controlling factors that we haven't had to deal with before, then last thing I want to do then is double down on I'm already wrong in expecting a summer rally. And I think instead I'll wait to see if we get some more confirming things showing that the bottom is in. And I sure haven't seen that yet.
And this means that, this thing's not going to follow a pattern. Are we going to see a fourth quarter rally in gold, or is it just going to keep going down here, Craig?
Well, a lot of that, I'm going to answer that question this way, Kerry. I wrote back in January, and you and I probably talked about it back then, what I thought were the three key themes for 2018, and they all had to do with the dollar, because we began this year much as we began 2017, all this, king dollar stuff. And then, you had this after breaking down from 92 to 88, then the dollar rallied from 88 to 96, 97, and now we're back to 95, 94 and a half. And everybody thought the dollar is just going to continue to rally. And I wrote this thing about the three themes, and the three themes were this de-dollarization risk, which is what we just were talking about with yuan as an example. Geopolitical risk, because we didn't know and still don't know what's going to happen in places like Syria, and Ukraine and other places around the world. But political risk, I think, is the main thing you're seeing right now.
Yeah.
Because a lot of this dollar strength and a lot of this market optimism and economy optimism and all that kind of stuff traces back really to what Trump has tried to instill in people and tax cuts and stuff like that since he's been in office. Well, the main political risk here, and maybe it's being exacerbated now by these, testimonies that are taking place in Washington with Kavanaugh. The main political risk is that, that form will follow as it usually does, and that the president in the first midterm of his term loses seats in the House and the Senate. And if the U.S. House or the Senate were to flip back to Democrat control, man, this Trump agenda, whatever it is going to stop dead in its tracks.
Yeah.
There are going to be 100 different investigations opened by every single committee in Congress into trying to figure out a way to impeach or imperil his presidency.
Yeah.
And confidence is going to plummet. Consumer confidence is going to plummet. Economic activity is going to plummet because people will be like, oh, boy. And that then leads to a falling dollar. It leads to, questioning this narrative that the Fed's going to keep hiking interest rates, all that kind of stuff. So when you ask me what could it turn in the fourth quarter, election day, that midterm election day coming up in about 6 weeks, that'll be probably the key day to watch, as we're, trying to impact what's going to happen in the fourth quarter and into next year.
Well, I just wanted to remind you, Craig, that October is National Lie to Your Pollster Month. All right.
True.
Everyone should lie to their pollster no matter what. You need to lie to them. If you're going, I don't care what party you're voting for, you need to lie to them, because before there was fake news, there was polling, and polls tell you absolutely nothing. They're inaccurate. All they are is an attempt by the establishment to influence the outcome. They're not an attempt to predict the outcome. They're an attempt to manipulate and determine the outcome. So everyone, if you're listening, you should lie to your pollster, because it's for the better, because we need to eliminate polls altogether. There's even a poll out there on, what Melania Trump is going to wear next, It's like, and is it helping the country or hurting the country? And it's like, and they become news, So
that's good advice.
Yeah, so that's my take there. I think that most people, or many of you out there, are lying to your pollsters already, as witnessed by the outcome of the last election. So, it's like, look, you can come up with a poll to return whatever results you are looking for. You can create a poll to do it. And, it's like you say, Trump was seen recently kicking a kitten. Do you support PETA's effort to protect animals?
Good point.
And it's like, he's a puppy killer. We have to support PETA, even though they don't even know what PETA is, right? So
that's right. No, that's very good advice. And you're right. They try to shape opinion. So that a certain percentage of people will say, screw it, there's no reason for me to vote, because clearly candidate A is going to win. I read that in the newspaper.
Right. They call it astroturfing, right?
Yeah. Yeah, so. That's right. But, at the same time, though, I mean, there is history that in that first midterm after a new president's election, he loses seats in Congress. And it won't take very many. I mean, the Senate may be a tall order to retake, though I think that's what the Democrats are hoping for with this Kavanaugh circus.
I don't see it.
But man, I tell you, if the Democrats retake the House, like I said, every single committee that's now going to be chaired by a Democrat is going to come up with reasons to investigate Trump and his businesses and everything else. And that is going to impact consumer confidence, and people's optimism going forward, and whether, Trump's vibe. And so it almost becomes a self-fulfilling cycle in a sense.
Oh, for sure.
And by this time next year, or even earlier, by next summer, the Fed could very easily be cutting rates. Yeah. And talking about more QE as the stock market falls and the economy, slows to a halt and that kind of stuff. So, this notion that markets are trading off of today, of all of the, lollipops and rainbows that
and unicorns
was doing yesterday.
And unicorns too. Don't forget unicorns.
And Kerry, I in my podcast yesterday, I told people it's like if your weathercaster comes on and says, look, it's sunny and 75 today. It's beautiful. And actually for the week ahead, look at this forecast. It's going to be sunny and in the 70s every single day. Nobody is going to imply that winter has been called off.
There is climate change. Don't forget climate change.
Well, that's true.
Right?
But no one's going to look at the forecast for the next week and assume that now that means there are no more cycles of the weather. There's no more, everything's now just going to be 75 every day.
Right.
But that's kind of what economists and the CNBC and all these are trying to tell you, your stockbroker, everybody else, because of what Powell said yesterday.
Right.
That, hey, the economy's looking good and it's never going to change and rates are going to go up every quarter for the next 5 years or whatever. And it's nonsense. It doesn't work that way. But that's the narrative that's holding today. And that's getting back all the way to where we started. That's why gold is down today.
Yes. Yeah. Well, it's like the future is always uncertain. As much as you think you might know what's going to happen, you don't. It's always subject to divergence from your forecast. The problem is that, look, if you really believed what you said and traded accordingly, you could have suffered a big loss, couldn't you have?
In what regard?
I mean, if you were buying gold in anticipation of that summer rally.
Oh, yeah.
Right?
Yeah, absolutely.
You could have taken a hit. And even if you're a disciplined trader, you would have suffered a loss. Right?
Absolutely.
And, I think the stock market's telling us that if you can believe what it's saying, that things will be more like they are now than not in six months to a year. I don't think you can look at the market as an indicator past 18 months and probably less than that now, if it's an indicator at all, which I'm not convinced that it's totally lost its ability as a leading indicator of what's ahead. But on the other hand, too, we never saw an economic recovery the past 8 years since Bush left and Obama came in. There was never an economic recovery. When you look at the unemployment, workforce participation, all that, we never had any recovery whatsoever. It's only happened since Trump came into office, if it's happened at all, which I'm not convinced, but it's certainly better, at least at the margins, than it was before Trump.
Yeah. Well, and to your other point, Kerry, that current narrative that, the stock market looks great and everything's going fine and that everything's under control. I mean, that can change almost overnight, and all of a sudden there's a whole new narrative that carries things forward for the next 6 or 12 months. What if, and again, you don't want to play the what if game, but let's say there's a scenario that plays out that, a war begins in the Middle East. And suddenly Iran and Saudi Arabia and Israel and everybody are going at it. And the Strait of Hormuz closes and crude oil prices go to $150 are conceivable things. That would probably impact the narrative of economic growth and all that kind of stuff.
Yeah, I think. Well, it'd be good for the defense stocks. Look, the defense stocks have been
that's for sure. But what I'm saying is this again, the forecast, just because of how it looks today, does not mean you can extrapolate that forward indefinitely.
No. Well, that's the problem.
Yeah.
And that is the problem, because most forecasters are just what I call extrapolators. They make no effort to try to see beyond the horizon other than to project the current trend into the future. And you can't do that. As we see over and over again, you need to be looking at reasons why a trend is going to change rather than why it's going to stay the same, because trends change over time. But, the average Wall Street analyst doesn't want to hear about that,
Right. Exactly. You're spot on, my friend.
Yeah. So I call them the great extrapolators.
I like it.
Because you could just extrapolate anything, and trends change. So the real trend people, the real cycle people, they're the ones I found have been the best, but they missed this decline in gold for the most part as well. I will say that, but we'll talk
again, like I said, Kerry, the thing that has really changed is this tick for tick thing that's developed with the yuan since about February or March. But it is, it has been on since the middle of June.
Yeah,
and
you're totally right.
Thing, you mentioned trends and adapting your forecast. At least if anything, I went searching once this didn't play out and the summer rally didn't play out, and I thought, what have I missed here? And it's this yuan peg, and that's the thing where it's fun to think about. It's an interesting thought experiment as to what might be driving it. But boy, when you see it play out on a daily basis, it's something that we've got to learn more about, because it sure seems to be the key driver, at least for the time being.
Hey, and this happens regularly in all different sorts of markets. For quite a while, we saw the spread between West Texas sweet oil and Brent crude diminish to the point there was nothing. Now it's back again. And that is significant, but for reasons I don't think are really covered by the financial media. I saw one article. Mickey Fulp and I have been covering that indicator, Brent to WTI ratio, for 6 years. And all of a sudden, the Wall Street Journal discovered it and had a big article that, oh my God, the price of oil could really be messed up in a recession and all this because of the ratio, which it really has nothing to do with that. It's partially due to factors of the two individual markets, and it's partially due to global factors. So sometimes there's a local answer to it, and sometimes there's a global reason for it.
Yeah.
So, it tells me that demand is flagging here in the U.S., is what it's telling me, and that the Europeans are kind of just stuck in a sideline channel, But there's a lot of things you could learn from these things. So anyways, well, hey, so TF Metals, tell us what's going on there, tfmetalsreport.com.
Well, I would, I guess, give a plug for the site by saying, I think its primary value is the people that congregate there. And I think probably most everybody that congregates there would say that too, in that we've got a community of folks that realize we're all in this economic morass together, right? We're all kind of stuck on the same boat. And so we're trying to help each other see our way through it and prepare for, stuff that's coming over the horizon. And we do it in a way where that's really unique on the internet, in that we all kind of respect each other and we don't call each other names and hide behind the anonymity of the internet by blasting away. It's really a unique community. Access to it, and my analysis every day is a whopping $12 a month. And so I encourage everybody to check it out and see if it's something you want to be a part of. Again, tfmetalsreport.com.
Excellent. Hey, and if you look at the show notes, there's a link right to it. Just click it. You'll get right over there. Check it out. It's definitely the best bargain around. And the quality of your people, your subscribers, is really up there among all the sites, Craig, I have to say.
Thank you. I appreciate that.
It really is. So anyways, hey, well, hope you enjoyed this. And again, just go over, check out the site, tfmetalsreport.com. Check out our site, Financial Survival Network. The Twitter feed's at Kerry Lutz, and the Facebook page is Financial Survival Network. Craig, we'll talk to you again real soon.
All the best, my friend.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.